What is up, you guys? Pete DiCarlo here, and today we're going to talk about a company that I just took a long-term position in. The company I have talked about multiple times on this channel, and I originally was buying the stock down at $7 this time last year, and that stock and company is Smile Direct Club, and the ticker is SDC. Now, the stock is down 20% today. We're going to go over why, and we're also going to look at their earnings and where I see the company going in the next couple of years. If you want to see the deep dive video that I made on Smile Direct Club, I will tag it here, or you can just type into YouTube Peter DiCarlo Smile Direct Club. You'll see this entire deep dive video that I did, and the fundamentals since then have not really changed. Now let's take a look technically over since IPO, so since let's see, September of 2019 till today, how the stock has performed. So stock IPO'd at $21 and since then has gotten nowhere near where it was. During the pandemic, the stock hit lows of $3.53. I had it on my radar, but I didn't have a ton of money to be buying positions because I was averaging down heavy on the stocks that I already had. We bought a lot of this company around $7 and we sold a good portion of it around $10 to $11. Since then, the stock did hit highs of 16 bucks before pulling back pretty significantly. Now, I do have a Fibonacci drawn out here, and you can see that the Fibonacci works extremely well as resistance and support. I did do a Fibonacci video on this channel. If you just want to look up Peter DiCarlo Fibonacci or just Peter DiCarlo Fib, you will find that video is a very strong tool to use, especially on these bigger time frames. Now, Small Direct Club is down pretty huge today, and you can see the position that I took was $5,000 worth. I'm currently down about 4% right now, but I plan to average down into this position if it falls down to support at $7.38. That's kind of the next line of defense. If we don't bounce here, it's going to be at $7.38, and that's where I plan to add significantly to this position. Now, if we take a look at Smile Direct Club, this is why the stock fell. So Smile Direct Club stock drops after cybersecurity incident. Financial repercussions are disclosed. Now, if you guys do remember, I think it was in 2018 when Experian had a cybersecurity issue, the stock cratered and then it pretty much recovered within the year. So to me, I think that the stock market is overreacting to this news from Smile Direct Club. It is a huge deal, but to me, it's not as big of a deal as everybody's making it seem. So shares decline more than 7% after hours as direct-to-consumer orthodontics company says its incident will cost them millions of dollars. So dumped 7% last night. I was going to buy some shares, but I was like, I'm just going to wait till it hits that $8 range. That's where I want to buy, and it did. So Smile Direct Club falls 7% after hours trading, and on Monday, following an official disclosure of a cybersecurity incident and its financial repercussions. Smile Direct Club revealed in a filing with the Securities and Exchange Commission, the SEC, that it was hit by an attack on April 14th, causing the system to have an outage. While the company did not disclose the exact nature of the attack, it did say that no ransom was paid and suggesting it was a ransom attack. So here's the thing. They didn't disclose exactly everything that happened, but they did say they didn't pay a ransom. So to me, the non-disclosure says one of two things. Number one, the stock is just overreacting, and the stock market is overreacting, which we do a lot, and they just didn't end up disclosing it because they didn't have to, or it was so bad that they didn't disclose it because they didn't want to freak people out. So there are two things to that. At this time, the company is not aware of any data loss, which is good, or other loss of assets as a result of the incident, including any exposure of customer or team member information. So that's good. That's a positive thing. Even though they were attacked, it didn't seem like anything as far as IP, data, assets, or customer or employee information. That's a good thing. The incident, however, has caused, this is where it gets bad, and may continue to cause, that's not good either. Because continuation of delays is not good. This has caused and may continue to cause delays and disruptions as part of the company's business, including treatment planning, manufacturing operations, and product delivery has been delayed. Smile Direct Club said that it expects to realize a $10 to $15 million revenue impact in the current quarter as a result of this incident, though it hopes that its relevant insurance coverages will help to cover some costs. The company reveals that it now expects $195 million to $200 million in the second quarter of sales, subtracting the impact, which comes in lower than the analyst's average expectation of 2.07. All right, so a couple of major things within that paragraph. Number one, a $10 to $15 million revenue impact is pretty big. It's not absolutely insane. It's not like $100 million or half of the revenue that they were expecting. It's about a 5% loss. Still pretty big, especially for a company that I don't believe currently is profitable. They're not profitable. So that is a big hit. Now, it does hope that insurance will cover some of the costs. So that's a big thing to think about yourself too. Now, if you're going to invest, how much is the insurance going to cover? The insurance might not cover much at all. If it doesn't cover much at all, well, then guess what? The stock's going to continue to plummet. If they come out and say, hey, the insurance covered everything, they covered all of the losses that we incurred, the stock will probably quickly shoot right back up. The company revealed that it now expects $195 to a $200 million loss. So short term, $200 million in revenue. Short term, it looks like they're going to miss revenue, because that what they were expecting was 206. They're looking at about 195 to 200. Well, guess what if that doesn't happen and revenue comes in at 210 million? The stock freaking rips. What if revenue comes in at 189 million? The stock dumps. That's something to think about too. So Small Direct Club also revealed preliminary results for its first quarter filing. This is never good. So when a stock, or a company I should say, comes out and reveals earnings early, it's never a good idea. Like, it's a decent idea if your earnings are crap, and that's the only time that you normally do that. When a company comes out and gives their earnings before the earnings date, it's usually to, brace investors for some crappy numbers. And they also revealed this issue that happened about 3 weeks ago at this point. So they did reveal preliminary results for their first quarter filing. The direct-to-consumer orthodontics company said that it expects to report a first quarter net loss of $95 million, or 25 cents loss per share. Analysts on average were expecting 10 cents per share loss. So missing by about double. You can see here they were expecting a 10 cent, a 10 cent loss. They're going to be posting a 25 cent loss. When a company, this is not just for Small Direct Club, but when a company comes out and they give earnings early, never a good sign. Never a good sign. A company never gives earnings early because they're going to smash everything. Let's see. Small Direct Club does plan to report full earnings on May 10th. Small Direct Club shares dove more than 7%. Now they're down nearly 20% and could continue to fade. Overall, I do like this company. Like I said, go back and watch the deep dive. I think this company has an insane room to grow. If you look at a company like Align, they've been doing amazing. And overall, the company was doing really well before this. The stock price was doing really well. The fundamentals of the company were doing pretty decently. And I do think it is a speculative investment for sure. And I do think buying now is a bit premature, but I want to get back into this company. And I think that it's fairly valued at this point. I do think the stock could fall down to $7.25 range, and I would just continue to buy more. So overall, I wanted to start a position. I want to add to this position. I like this company. I think the stock market is overreacting to the way that this company is moving and overreacting to this news in general. I am currently down about 3.5%, but I'm happy with my decision to buy, and I will continue to buy, and I'll continue to keep you guys and girls posted. If you guys want access to every single trade and investment that I take, you can use the code Academy90. Start for $10 your first month. Get access to my private academy. I go live with the mentees every single morning for the first hour of market open. Go over what I'm trading, why I'm trading it, what investments I'm taking, what do I think is a good deal out there in the market. As well, you get access to our 60-hour course library. Gain access to information that I've learned through my entire 7 years of portfolio management. It's a great community to be a part of, and I'd love to have you guys there. Hit the like button, subscribe to this channel, and I'll see you guys tomorrow.